Yo, what's up? This is Noble. I'm back. I appreciate that. Thank you. I appreciate that. It's been a few weeks since I've been able to go live, do my thing. So, welcome to Insider Trading. My name is Noble Woods. I'll be your host for an hour. Look at the market. This is called Power Hour. What is Power Hour? Right now, traders have either made some money for the day, made some money this morning. You didn't. You're chasing right now. You're trying to figure out how to close the day in profit. You're trying to get some of your losses back. Or maybe you sat out. Maybe you're watching. Maybe you're profitable once again. And you're thinking about tomorrow already. So Power Hour is real special for like real traders. Why? Because sometimes, the way the market shakes out, the way today went might give you a little insight about tomorrow. You might be placing some trades end of the day today, expecting certain things to happen tomorrow. Every day adds a new candle, a new piece to the story as we read the story of price action, right? So what do I do in these live webinars? I just take some time, slow things down, want to educate you, have some fun, show you some live charts too. So if you got some stocks that you want to see, feel free to type them in. Let me know what you want to look at. You're getting free analysis. I do the work for you. Free analysis. We're going to talk about ranges. I got to go this way. We're going to talk about ranges today. The market only does a few things. Price only can go up or down or range. And when it comes out of a range, we're still going to go up or down. So I want to step back, simplify this, go back to some basics that advanced traders like me still use. I still pay attention to ranges. The market ranges all the time. Sometimes that's the perfect time to just stop trading. Just relax. It's going to be choppy. Let the amateurs, the people who don't even know to look at ranges, let them get chopped up and fight it out. You get in when it gets clear, right? So there's a patience to this game. There is. There's a patience. You can't make the market give you money. You can't make a stock give you money just because you sat down to trade. It doesn't mean that the market, right, we're stuck in a range. Maybe that's just not even what you want to trade right now because it's in a range. So I want to show you ranges. I want to break them down all the way from the month chart to the week to the day to the 15 intraday stuff, literally down to the minute. It's the same stuff. It's the same principles, right? Across all time frames. It's the same thing. Literally, it's the same thing. But the directional changes happen faster. So we're going to dive in. We're going to talk about ranges and how markets really move. I'm going to show you futures today. We're going to look at some stocks, whatever y'all want to look at. Let me know where you're from. I'm here in Atlanta. In the A. If you didn't wish me happy birthday, wish me happy birthday. It was Valentine's Day. It's passed already. That's why I was out. I was out of town, man. I went to Montego Bay. Hadn't been there in 6 years. I know that was probably terrible for people from Jamaica, but whatever. I love when they say years. It's been 10 years. Let's see. My guy Demetrius, what up? Demetrius said Tesla. Take a quick look at Tesla. Cool. Aisha said AMD and SoFi. I always say Sophie. It just looks like Sophie, but I know it's like SoFi. I know. Let's see. Oh, that's what's up. Keith is out in Riverdale. What's up, brother? Thanks for joining. And the big homie, big cousin, Joe Rodney Harrison, listening from the road. Listening from that Tesla. Can you pop this up on your screen in your Tesla, Joe? Let me know. Matter of fact, take a shot. Say if you don't get obey the rules of the road, but you can take a screenshot. I want to see myself on your screen in your Tesla. Happy belated birthday, bro. Mine is the 14th. Joe's is the 12th. Just before me. He's older, though. He's like 35 years older than me, though. Jokes. All right. So, should I look at y'all stocks first, or should I make you wait a little bit? We got time. I'm going to go through what I want to show you guys with ranges. I think it'll help. I really do. I think it'll help. I think it'll help. I do. I've been trading longer intraday stuff. I mean, day trading, but trading longer. I like to get in and out. If I can get in and out in 30, 40 minutes, I'm done. All right. I've been trading longer this week, though. I traded like all day Monday. I hadn't had the energy to do that in years. All right. So I'm getting, you're constantly trying to improve, as a trader who can, technically trade any time frame. Right now, the market's volatile. I love it. I'm just focused on futures. It's just fast money. That's me. All right. Because it's volatility. I like volatility. I know how to adjust to it. So Christopher John said, "What's up? Listening while driving." That's what's up. Appreciate you, Chris. So let's do this. Let me turn the music down. All right. Let me get my screen up. And let me take this off. Right here. Yeah, I'll make the screen a little bit bigger. So ranges. Get rid of this. So I'm on NASDAQ. I'm on a clean chart. I don't even need to put any indicators on here to, get all fancy. I'm going to show you a couple things you can do, give you some tips that hopefully will help. And I also want to show you how to almost like some cheat codes, right? I want to show you how to find something that an indicator normally will tell you without needing that indicator. Right. So some of y'all love moving averages. If you love the 20 moving average, 20 period 21, which is like the mean, it's literally statistical concept, right? It's right there in the middle. That's what that 20 really represents, the middle in a bell curve. What price loves to go back to the test, the average. We love to go back to the average. If you love the 20, would you know how to look at the 20 or basically see a 20 without even putting a 20 on your chart? That's when you master an indicator. When you literally know it so well, you understand the math. You can use other stuff to make it, even though you aren't even using it. Why is that helpful? Why? Because maybe the broker that you love, maybe you switch from Thinkorswim to something else, and they don't have a certain indicator. Can you duplicate it? Do you really know what it is? Right. So I'm gonna show you a little something. But we're gonna talk about ranges. So what is a range? Markets only do three things. They trend up, they trend down, or they range. That's really it. Right. This game is a very sophisticated data analysis. When you're looking at a chart at the current moment, all you need to really be able to be confidently say and confirm with several, a couple different tools, techniques, methodologies is what is the direction? Where is this stock, futures, foreign exchange, crypto? Where is it most likely to go in the very near future if I'm, swing trading, day trading? Longer term, is it bullish? And we get into like investing. That's a little different because you're okay with the dips and really the drops and all that. You're just going to keep investing, right? So that's investing. We're not even talking about investing, right? We're talking about traders because I know a lot of you guys are, right now you're investing, but you also are trading. You're trying to speed up that, trying to speed up the growth, right? I get it. So this is a NASDAQ. What you should see on this chart without me even pointing it out, and some of y'all really don't, because I do a lot of consults. I haven't done a lot this year, honestly. I did a ton last year. But if I zoom out just for a second, all right, this is NASDAQ. Cruising, just bouncing off this trend line. Boop. Week chart, right? Week. So touch this trend line there, push the new highs, came back, touch the trend line again, push the new highs, touch the trend line again. But right, so that's basic. But that was enough to let you kill NASDAQ for the last since November. Just that right there. A trend line that we are not bouncing off of, pulling back to it and knowing when to get in. Week chart. Get your options 30 days and relax. You can't control the market, but these were easy trades. Just pop to new highs. So we pull back to the trend line again. right? We got to 408, right? So I'm gonna zoom in a bit here. We got up to 408, but here's the tough part. Here's the tough part. We pulled back to the trend line. We got close. Didn't get that perfectly. Sometimes we don't. We pulled back to 380. We pushed back up to 404. The high was 408, and we didn't get there. Before that move happened, I'm gonna put a little box there. Before that week gave you that what's called a Gravestone Doji. You should know these terms. What is a Gravestone Doji? You should Google it after I say it, but it's a candle that represents confusion. That's all. And it represents confusion on any time frame. You see that on any time frame. Ugh. Market's a little stuck. Confusion. Not clear on which direction. Usually, when we break the high or low of a doji like this, without even blinking, you should have known if we break the low of that candle, there's a really high chance we're going to come down to this low, which was 380, because we had tested that area 3 times and it was the trend line. But that's not even the point. Here's the point. Here's the bigger point, bigger, larger picture. Before that even happened, the market pulled back, and for 5 weeks, we were in a range. In a range, not going anywhere. This is when the market is stuck. The big institutions they're not ready to put more money on the table. Retail traders like me and you who don't have billions of dollars in shares in our disposal, we're trying to really copy, right? We want to be in the moves. The market moves because the market makers and these big institutions, right? Volatility. You got to go with the trend. Trend is your friend, right? You've heard that. Trend is your friend. But what do you do when there is no trend? First of all, can you even slow down, right, for a second and realize that there is a range, right? Can you see these? They happen all the time. I'm gonna hit a couple charts real quick. I'm gonna break this down. So here's a simple beauty of ranges. They're not that complex, right? We touched 380 one time, 2 times, 3 times. If you were paying attention, and it's so important, y'all. I swear, even if I don't care what kind of trader you are, if you swing trade options and you're only looking at like day charts, 4 hour, 2 hour, you got to flip through other charts. You have to. Why? Because if you were, let me show you this. If we go to the day chart really quick here on NASDAQ, and that's all you saw was this up and down, up and down, up and down, right? And you never flip to the week. It takes 2 seconds to flip to the week. You just a quick glance. You never really saw that week looked like that, right? And you processed price action, classic price action, newbie stuff. Honestly, one of the first things you should learn are these little basics: ranges, breakouts, dojis, reversals. That's all the market is doing at all times. It's trending, it's reversing, or it's stuck. That's it. That's it. So that candle should have gave you a lot of information. Your bullish, your desire for this to go up should have been very, very low after that candle. If we broke the low, right? And that's how really good traders think. Everything is if. I don't know what's going to happen, but if this happens, I'm going to do this. If that happens, I'll do this. All right. It really is a if this, then that, constantly being in front of the moves, constantly being in front of the market, not waiting for something to happen and reacting. And let me think, what's going to happen now? What's going to happen now? I don't know what's going to do. Because you haven't been thinking about it. You're constantly reacting. The market controls traders like that. Oh, they just take your money all the time. All right. Trust me, I know. All right, I had a long journey with this. But now, every chart, everything I look at, I'm just in front of it. If this happens, I'll do that. If this happens, I won't take a trade. I want to see this be right. So I'm always in front of it. So if what I want happens, guess what? It's easy to execute. I already was waiting on it. Right. So this candle gave us that ugly gravestone doji. If we get under that, I'm gonna draw a little line under that. Did we break under that? Yeah, we got under that. That's not a good sign. You knew where we should come down to, right? Basics should come down to this trend line. Also, the bottom of this range. But are we gonna break the range though? I don't know. All I know is if we get a good close under the range, That means a lot of those people who essentially were buying, and during all these 1, 2, 3, what is that, 4, 5, 7 weeks, 7 weeks, NASDAQ just froze on us after hitting that high of 408, 7 weeks. You know how many bulls are salivating? How many newbies just expected us to come down and go right back up? I mean, you know what call options are doing when price doesn't go anywhere for 7 weeks? They lose value and people lose patience and bulls lose energy and big investor. I want to say big investors. Big institutions, they start hedging some bets in case we go lower. And guess what? This week here, we opened under, we pushed back up, and then we had a really, really strong sell-off the week of 117. You should have already knew that this week was possible, that lower was possible if we simply closed under this range. We broke the range here on this candle, and we pushed under it here. That was that really strong 7 days. Everybody on TV, oh my God, the strongest 7 days. We haven't seen 7 days of the market dropping like this, and it was very predictable. But did you see the range? Right. So I'm trying to help you to see. Did you see the range? Because this was a long one. This was 7 weeks of the market going nowhere. You felt it. We never got a Christmas rally. Me and Joe, we was telling you about this. I've been talking about this same chart forever. since like it was happening, right? So we went lower. Okay, cool. Let me go down to a day chart. Let's do something a little different. We'll go to a day chart. All right, we talking about ranges. So guess what? Here's another little range. Check this out. Everybody's waiting on the market to pop. Everybody's, buy the dip, buy the dip. Everybody, okay. Well, here was the dip here. Right. So I'm connecting the points, right? This was those bad 1, 2, 3, 4, 5, 6, all those 7 days, right? Clear. Very predictable. Very, you can get in front of it. Very, if we break the low, right? That's bad for bulls. Understanding what price action really is. It's understanding how price movements affect bulls and bears at the same time. If we go under here and I was in it and I was buying all that, what am I going to do? You probably going to get out. You're probably going to exit all of your trades because you're now losing. When we get under ranges, all the bulls are losing. When we get above ranges, all the shorts are losing. All the bears are losing if we get above the range, which is why we tend to go higher. That's why we break out, because somebody loses really badly. That's it. That's all it is. So where's the next range? Market did it again. Hammer candle. Look at that hammer. Ooh, that's a nice hammer. Ooh, yeah. People see hammers. Hammer is a classic reversal sign. It's at the bottom of this range. Buying the dip. Cool. You bought this dip. All right. You got in above that hammer. It took 1, 2, 3, 4, about 5 days for us to get out of it. Really strong day. Got really good momentum that day. Oh, wait a minute. Okay, yeah, y'all can still see my candles. I was tripping for a second. I'm like, oh, wait a minute. Let me make sure they can. I just got to come back and check it every now and then. Make sure y'all can see everything. All right. Make sure y'all can see everything. Hold on. Oh, it's 326. So the market closes at 3. I'm sorry, 3. At 4. Y'all gonna hear this. All right. You're gonna hear that closing bell. I'm gonna stick around because right now we're talking about this. How to make that. All right. So in here, this candle, money candle, very strong bullish day. We're coming out of this little range. All right. But the short-term trend is down. The the market is up. The market is bullish as a whole. We've had an amazing last 2 years. It's bullish. But right now on a shorter time frame, which means if you're trying to make money faster because you're using the leverage of options or futures of foreign exchange, right? Shorter. Usually people are trading really small time frames with more leverage just to make faster money. But the moves are the exact same on the longer chart, small. It doesn't matter. These concepts work across everything. We just make it really confusing, right? And don't realize that you really need a higher level skill set to operate at faster time frames. Because it's literally about speed and how fast you process the information. That's all it is. That's all it is. So we came out of this range, right? Price was stuck. Tried to drop. Didn't have enough sellers down there. Bulls, bears, think about it irrationally, like rationally. Bears who killed it, who made money here, caught this whole move down. Ooh, 7 days down, 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 down. Amazing. He made a lot of money. It was a lot of money, man. A lot of money, man. Bears were happy. Tried to go lower. Could not go lower yet. Had a really strong day. Pushed a little bit higher. Pull back. Okay. Okay. So this right here, this day is kind of like the day to watch. Why? Because that's the day that created the breakout. Right. And think about it in a really, really simple form. Anybody who like it took bulls, it took buying to get us above this candle, right? So this day, a lot of people had to buy to get the market higher. So what do you think will happen if we get under that day? We get under this day. And the funny thing is, here's the funny thing. Market pushed up for 2 days, and then look at this. We bounced here, we bounced here, and now we're ranging where? We're ranging inside of this candle. This bullish day, we're ranging inside of there. Right, we pushed up again right here, and here's the crazy part. Some of y'all gonna be mad. Some of y'all gonna be mad. You're gonna be like, man, you can't tell me this is doable to like consistently look at the market this way. If you drew a trend line here, connected these two, right? And you put a little circle so you can see which one. Connected this little high as the market collapsed. That little push back up into the range that faded because we didn't have enough buyers. Bulls were tired of trying to go back up. They was like, forget this Christmas rally. I'm going to chill. Market came down. It's a tug of war. They just let go. Other side won, right? Market dropped 7 days real hard. Pull back up. I showed you the bullish candle. And then we had one more day where we gapped up outside of the range. We might go. This could have been it. We could have got above this trend line, broke the trend line, took off. But we didn't. We came right back down inside the range. Held to the trend line, and then you had this candle. You had, let me show it like this. So you got this ranging, right? You had the day the bulls kind of showed, they showed you some strength. And then you had this day, right, where we closed underneath the range. We closed under the range. And did we break it? Did we continue? Yep, we got a little pop. We pulled back up for 2 more days, ranged inside there. And then what did we do? Lower, 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 big lower low. You finally got some bulls to say yet again, okay, we're lower. You got a lot of dip buying happening. The market's bullish, generally speaking. Every investor is bullish. You don't want to buy. You don't want to short a stock. Nobody's right now shorting a stock saying, oh, man, I'm going to get this 20 years. I'm in a 20-year short, a 10-year short. No, it don't even make sense. Shorting by definition is a short-term play, right? It's more advanced. It's a short-term play, right? So all investors are bulls, technically speaking, right? Why? Because millions of people go to work to create value, right? We don't go to work to trash companies. Now there's competition, so companies come down and get trashed, but people go to work to create value, right? It's all about shareholder value. That's what it's about, right? So back into the charts. So check this out. Now, look at this. What are we doing right now? Well, we're kind of ranging again. Right? We're ranging again. So I showed you a range on the week chart. Right? I showed you this range up. I showed you this range up here on NASDAQ. We came out of that range. We went lower. I showed you on the day chart. I showed you a range here on this hammer. We came out of that range, a quick bullish move, but on options, that could have been a quick 100%. I'm not mad at you, but do you have the skills to trade that fast? Do you have the technical skills? Do you see this basic stuff? It becomes advanced. It feels advanced to you maybe right now, just because I've been seeing this for like 12 years of my life. It's not like I'm not even thinking to do this, right? As I'm doing this type of analysis, right? The trend line held really strong. We ranged inside this bearish day. Bears, That didn't mean we were about to drop, but there's a higher probability now closing under the range. Why? Because the bulls who for 9 days were hoping this market would go higher, we closed lower. When we close lower than a range, everybody who was trying to go this direction, who was buying for those 9 days, their contracts are down. They were burning premium and losing because of theta every day. The market wasn't going up anyway. If you just bought the stock outright, you're losing. Factually, you're losing. Why? Because price is lower. This is about price. We always talking about price action, but nobody walks through charts meticulously like this. It's crazy to me. I don't even know what y'all be talking about when you say price action. You need to spend more time with your charts. You need to spend more time learning the basics that are the advanced skills, concepts of what this is over time. All right. So we're in a range now. All right. Ranging now. Why? Because we don't know if this day was really the day. So you got everybody and their mama, people texting me, yo, is this going to be a dead cat bounce? What the hell is a dead cat bounce? That sounds really abusive, actually. Dead cat bounce. I like cats. That hurts my heart to even think about that. But what is a dead cat bounce? I mean, Google it. Right? Google everything I say. Don't trust me. I'm just showing you the charts. I can show you what I believe, what happens, what works, which is why it's important to see somebody kind of teaching and showing you these things working. But here's the thing. The dead cat bounces essentially is this going to really hold? This really big bullish day. That's a great day. But all we did was run back to the trend line. And as you can see, we haven't gone out once again. We haven't gone above the trend line. Right. So peep this. All right, check this out. This candle here fundamentally is the same as this little area here. Right? Why? Because it was at a trend line, closed a little bit above. We never got a follow through. Closed a little bit above the trend line, and so far haven't got a follow through. It's the same thing, right? So you got to see these patterns over and over. The market is not that smart. It really is not as wildly. I know y'all like for real. That's your that was somebody special. I gotta turn my phone off. Yeah, market isn't as sophisticated as y'all think it is. It's so predictable. You just don't have the skills yet. You just don't see it the way advanced traders see it. And I didn't see it. It took years to really see this stuff and be like, man, it's really not that hard, but it is really sophisticated. It is. And these are principles. It doesn't mean that, all right, it doesn't mean we can't shoot back up. It doesn't mean all right. So these aren't rules. These are just guiding principles, concepts to learn because they help you in decision making. You know what's most probable to happen. All right. And then you can say, if this happens, I'll do this. But if this happens, then I'll do that. So you're in front of the move. All right. You're not reacting emotionally to every time the market does something. You're like, oh, I'm long now. Market pulls back. Oh, I'm short now. I'm buying calls. I'm getting out of my calls. I'm buying puts. And I have people who hit me up with that. And they like, I was in calls on Monday. Market pulled down. I sold my calls off and I got in some puts. So now you're just chasing whichever direction price goes, which just tells me you really don't know what you're doing. You need to slow down. You need to practice more. You need to learn these concepts more. You need to spend 5-6 hours on Friday and Saturday. Stop watching whatever you Netflix. Stop watching the Yeezy Genius. Uh, Stop binging that stuff and binge this stuff. I get it all the time. People really only write me to ask me questions. And I get some messages every single day. Every single day, somebody's writing me like, "Yo, what you think about this? I did this. What you think about that?" And I'm like, "Yeah, I went and did that." Or, "Good job, like what you're doing." But I'm trying to give a little tip. So, okay, in the range. So let's do this real quick. I'm gonna hit your stocks. I'm gonna hit y'all stocks real quick, but I gotta show you this. I gotta show you this. Little cheat code. Little cheat code. It's for real. It's a cheat code. So check this out. Check this out. Oh wait, hold on. So this is the ES, which is I knew we coming back down. I knew we were coming back down. Why? Because we just broke out of a range. But it's cool. Yep. I just missed $1,000. $1,000 trade, pretty easy. It's all right. It's all right. It's plenty of trades in a day. The market's so volatile now. Is so many trades in a day. Intraday stuff. Intraday, right? So check this out. Here's what I want to do. Think about this for a second. Depending on the time frame we look at, right? So if perfect example. Oh, that's perfect. Better way to show you what I'm explaining. If I go back to that what is that 6 week period up here where we had a range on the week chart. If I went up a time frame to the month, right, then you really just, oh, look at that, a big doji on the month chart. And I started this off by saying dojis are candles you need to know. Look at different time frames. So even if you didn't see that range on the week, if you just for 2 seconds looked at the month just to see what is Nasdaq doing. Just what is Nasdaq doing on the month? Big doji. Market's confused. So the month showed you that. The week gave you more detail. The day is where you would have taken your entry if you were advanced enough to, short it, buy some puts, right? I'm not assuming everybody is going both sides. Even that's more complex. Some of y'all just need to stay long. Stop trying to do both sides. You don't have to do both sides. You get it in time. Right? Because you really can't trade to both sides if you don't really, really, really get what both sides are thinking and these basic concepts, right? So, month chart, you can see the same range in one candle versus in the week. You see it, you still see it, you just see it in more detail. You get the detail, right? So think about that. So a day itself might be rangy. Think about that. A month candle might actually show you 30 days of ranging. What's my point? I'm gonna go here, back to the yes. So literally think about this. One day, I'm gonna go down to the 30-minute. One day, right? One day's candle can show you ranging, right? So think about that for a second. In one day, the market may not go anywhere. So that day, it is in itself a range. So the ranges depend on your ability to look at different time frames. Once again, don't worry about all the multiple time frames per se. Just trying to give you this concept. So check this out. Um, Joel, I love that we use different stuff. He's been talking to you guys a lot about average true range, ATR. What is average true range? It's what it sounds like. It's the average true range. You can find average ranges across anything. And why is it important to know the range? Because that kind of tells you the strength of the market. It tells you how much it's moving, how fast it's moving, how high and low we tend to go, right? It gives you kind of a range of we're here, but how far can we go? So check this out. Last few days, because I trade the yes, right? If you put a box over the high to the low from 9:30 to 4 of that day and copied it, look how this day, very next day, pretty much the bottom was the same bottom. So if you're intraday, right? And my point, what I said earlier was, I do a lot of stuff. I draw on my charts a lot. I ain't gonna lie, I do, right? So I really, even though I'm looking technically, I'm looking at like the average range of the prior day or two. I never pull up anything dealing with like a ATR, and I was like, dang, it's the same thing. It's the same thing, right? So I just kind of do it on my own, right? If I didn't have a study that could show me the range, all you gotta do is put a box over the high and the low. That's all you gotta do, and then copy it. All right. So look at yesterday. The same exact box, y'all. So from this, what is this? Thursday, Wednesday, Tuesday, Monday. Monday gave us that candle. Tuesday's range, it fit perfectly. All right. I'm gonna copy it again. Yesterday, from yesterday's low to the high was perfectly the exact same range. All right. And then if you look here, I got a little dot. I got a little high right here. Right? So that was the high. All right, that was the high. The high of this day from gray to gray is a new day. All right, so gray to black is one day, gray to black is another day. So that high, I got a little line. I tell people always make sure you know where the highs and lows are. We perfectly went to the high and feel the average range. That's easy. It's easy stuff. You know where the market is going. You know the range. If you can nail direction, you know where it's going. All right. And once again, I'm not trying to say this is easy, but I'm trying to show you these concepts. The market is not as wild and crazy as you think. It's not. It's really not. It's so much more organized and predictable. It's just we get to certain areas and it's a if. If we get enough of these huge funds to buy and right, the folks who really move the market, we go this way. If we don't, they go this way. You're just reacting, but it's very organized, very organized. All right. So check out today. Check out today. Same box. Look at that. Perfectly from the high a little bit before the open to today's low. It's literally to like the penny. So let me do this. I'm gonna go here. I'm gonna go here and show you this. I'm gonna go to the 5 minute. So check this out. Today, though, today's morning move was very smooth. All right. So I made some money in here. And when it got down here, and I was like, oh man, I'm gonna make some more. I was like, nah, that's probably it. Why? Because we feel the average range. So now for me to take another short, I'm actually trusting and believing that the market is going to move outside of the average. And if you think about it, that's abnormal. Averages, all right. If you, I don't know, on average, when you cook your food, you burn it. Why would I trust that you about to cook this great meal? You probably not. You're probably gonna do what you do on average. It happens the most. So it's not a high probable trade to take any shorts anywhere down there. Now, maybe if we pull back, you clearly, as you can see, the market, what did the market do? All right. It came back. We got to pull back. We dropped again, right? So check this out. Here's what's crazy. Here's what's crazy. I'm gonna show y'all really, and I'm just gonna show you like for real what I was doing today. So we got the low down here, right? I actually wanted the market to go up and collapse again. I was just gonna short it all the way back down, right? So I wanted it to go up, kind of get stuck. Hopefully, and that's what I wanted. Right, that's what I wanted. But I had this ranging candle here, this ugly candle. It's the same stuff, and this is on the 5 minute. So I just took y'all from long term stuff, swing trading. Now we like at day trading, but it's the same concept, same stuff. This candle here, I was like, oh, now we're about to range in this. Golly. All right. So when this candle here, I was getting a little bit excited, like, cool. We may close under this. If we close under that candle, that range, I'll then get ready to find an entry for a short. Why? Because we're gonna run back down to the low. Where else we got to go? And we might break it. Because sometimes we do. Out of nowhere, I got this big crazy candle that shot back up. I'm like, oh, so I was waiting on this range, right? Then I get this candle. So I wanted to watch it for a second. Are we gonna just keep moving? We peaked, we touched the high of that candle, and we pull right back. So now I'm like, oh, okay, cool. And I figured, and this is why I stopped trading today. I was just like, we just gonna range. And what do? We range inside of a range, for hours. Right. But what happens after we close? And same principle. What happened? What happened? Right here, we closed under the range, and then we got a little continuation. Now you can take a short. You just got to still know how to do it. But now everything's back bearish. Now you have a reason. You have price action reason. All the bulls who were trying all of this time to take the market higher, they're done. Price is lower. They're done. Get them out of here. They're done. All right. And where are we at right now? Literally right now at the end of the day, we're going right back down to the low. All right. I'm gonna show y'all my trade. Because right before I hopped on, I was like, oh, yeah. So my trade was right here. after that break, after that continuation, small pullback right there. I'm right there waiting for you to fall market. Boop. All right. So that was my 254. It paid out at 307. 54 to 07. 13 minutes. And it looked like it ranged, pushed back up. Probably would have had one more somewhere over here too. So, all right. So hopefully that was helpful. That's it. That's my range. I'm telling you, I could charge for that. I could charge for that. I don't think y'all realize how much money people are making on such basic concepts. Because price can only go up, down, or range. That's all it can do. Little trend line. I know y'all like Fibonacci's and all this different stuff. Okay, use whatever you want. But if you can't take all the indicators off and just read price, you got to learn that first. Or at least spend time taking the indicators off and making decisions. Because this stuff is very logical. It's very logical. Like, think about this for a second. All right, think about this. I'm going to go to a 15-minute chart. Let's go to 30. That's 30. Different chart. All right. Look at that. You can see the range here on the 32. Look at that. Look at that. And then we drop. Came out the range. What should we do? We probably gonna go back to the low. And what do we do? We went back to the same area, and now we getting a little bounce. So market kind of rejected off that low. Bulls are buying. Shorts like me are just getting out. Why? Because I'm not gonna. Why would I stay in hoping it goes through? No, that's why I'm getting out. Right? That's why this stuff works how it works. That's why these highs and lows and these little reversal areas and these little reversal candles, that's why they matter. Because smart traders are making money to a high, to a low, not getting to the low and saying, oh, well, we at the low. Let me start buying or shorting at the low. And technically that does happen. But as we talk about, like, kind of looking at a bigger time frame, the 30 was stuck. Okay, cool. Then you go down to a little sharper time frame. If you got the skill sets, you get a better entry. All right, so okay. All right. I think that's it. Let me see. So I got a couple questions. Somebody said, if you get a hammer, it's going down, right? Tricky question. So there are hammers. It depends. There are hammers that are bearish at the top of the day, top of a range, week period, top of top of a range, top of the day. Certain indicators tell you, the market's kind of getting weak up there. It's oversold. You'll hear that term. MACD, stochastics, all this stuff. It's oversold. You got a hammer. High probability of it coming down if we break the low of that candle. Same thing on the bottom side. All right, you'll have a hammer at the bottom. It depends on how the hammer looks, though. All right. You can even have an inverted hammer at the bottom. You can have an inverted hammer at the top. It might be actually saying, don't get out, because if we can get back above this inverted hammer, we're just going to keep going higher, right? So once again, in a general sense, generally speaking, hammers are just reversal signs, but it depends on where they are, which goes back to, once again, really reading and understanding what you're looking at, right? Really, really understanding what that candle means. A hammer is a day where price was pushing down. We were selling. And then a lot of people started buying. And we still closed the day bullish. So all of those bears, it's like a whole reversal happening in one candle. Right. So if you see a hammer on a day and you looked at a 15-minute, what you probably would see is a whole bunch of selling. And then by the end of the day, we came all the way back up, and bulls still ended up owning that day. And bears are pissed off. And when they happen at like ranges, areas of support, certain indicators tell you things are oversold, it's just, it makes it, it's just, you're adding logic together. It's like, well, I got this, and I got this. Those three things are all saying it's probable if this happens, do that. All right. So hammers themselves are basic, but I could show you 20 different ones on 20 different charts, and there's every one you got to like process the story of that chart, right? So it's not just hammer, it should fall, but it's like, okay, where is it? Is it in a range? Is it at the high, all-time high? Is it trend down? Like, what is it? You got to do that analysis every time. Somebody said, should we be concerned with the 50 with the 5200 cross on the QQQs? Oh, it's Charles. Charles Holland. What's up, brother? Oh, and then somebody said words of wisdom. Wow. I'm gonna screenshot that one. Because wait, hold on, let me get some music. Turn this music back over for a second. I put these on YouTube. And then like you're looking for a what do you call those? What do you call that? Little thumbnail. So I'll go back and find. So I'm gonna look at that. Or can I point to it? Y'all gonna be like, is he for real right now? Dang, that's the other way. No, where is it? Oh, it's right here. Right there. Right. So that's gonna be my thumbnail. Welcome to people who do live content. You gotta think about the thumbnail. It matters, I guess. Okay, so Charles says, should we be concerned with the 5,200 crossing on the QQQs? In general sense, yeah. I'm glad you know. I think definitely paying attention to your longer time frames of 15 and 200, kind of classic golden cross. The shorter time frame crossing through a longer generally means things are getting better. Yes, definitely pay attention. Does that mean it's back to if this then that? So I'll say yes. You should be concerned, paying attention. You are. What are you gonna do? If this happens, then what? And then if this happens, then what? Right? Because this could happen. Let's play around with that for a second. I ain't even put. I'm not gonna even put. I should put them on. I gotta put them on the chart. Charles, you're making me do work, man. I don't want to do no work. That's the easy stuff. Now you're making me do work. God, dog it. All right, let me put on a 250. I'm gonna do simple moving average. I'm gonna do 2 of those. I'll make this one a 200. My 200s are always blue and a thick line. Why? Because it matters more than a 50. I've been using these for years. My 50s. 50s are red. They're 3. Wow. Because the width tells me how important they are. Right. So this is what Charles was asking, right? The last time these COVID, let's look at COVID. COVID was really bad. The shorter term average came down. Right. So this is like, pretend COVID is like Steph Curry getting hurt. Oh, he's sick. He got the flu. His average is just gonna go down. Now he's still playing, but he sucks right now, right? He's just slow. He trying to get it back. Hurt his tendon, whatever. So his average, his shorter term game per point average, like what he's scoring on average, it's going to drop. But his longer term average, because he's a great player, his 2-year, 200 game average, right? That line shifts not as fast, right? It doesn't move as fast, right? So this is his 50 game average. This is his 200. His 50 came down and kind of dabbled off the 200, but then this was when, so it came down, but he healed, he got better, he got back on his game, right? So when you have your 50 above your 200, or your 10 above your 20, or your 1 above your 6, the shorter term average being above the longer one, all it says is that prices on average is going higher. That's all it is. All right. So all of COVID, look at this. All of COVID was pretty much, look at that. All of COVID. You had that cross trying to happen. They never crossed. The 50 went back up, bounced off, connected to the 200, bounced off it. And its entire 2 years. That's 2 years. All right. So right now, that 50 just crossed. Ooh. So that's why Charles is asking that question. Because we haven't crossed in 2 years. Matter of fact, let's find the last time it crossed. The last time we actually crossed was back here. All right. So y'all want to know, how you kind of get an idea. If this happens, then what? So check this out. Last time they crossed was here. What happened after the shorter term average? The 50 crossed under the 200 for about, I'm gonna show you exactly how many days. For how many days is this? We basically dropped another 17%. We dropped 17% over 21 days. If we just look at how long it took from the time we crossed to get back to that same kind of price area, right? Took 75 days. 17% drop. Right. 51 days. Right. What about how many days until they recrossed? Oh, it recrossed on there. 120 days. So they crossed, and it took 4 months for them to kind of realign, right? Really get you a bit more excited. And then from here, I'm gonna put a line on this one. Y'all gonna love this. Look at this one. From here, oh, that's the wrong line. From here, I'm gonna put a time series line, right? From there, look at that. That was back in, where is that? That was 2019. So the 50 and the 200. The last time the 50 crossed under and then came back up, 2019. COVID, they tested each other, bounced, bullish market. Right now, what's happening? So that's the importance. Oh, y'all can't see my chart. I did all of that. Godly. See, that's the thing about this. I love this system, but if you forget to like click it, you just be flowing and won't nobody even know what the hell you're looking at. Dang, I did all of that. That sucks. But because I love y'all, I'll do it again real quick. Okay, so the blue line is my 200. The red is my 50. So what Charles is asking is, should we be concerned about this cross? So you kind of heard what I said, right? When the shorter average crosses through, crosses So I'll go back here. So they crossed here, right? See the red crossed under. Oh, it's under. It's crossing under. That's a bad sign. The market from there fell 17%. It took about, I don't know what I said, 51 days for it to recross. But since that recross, that really bad 51 days, market went lower, another 17, another 17, another 17% when they crossed, and price started to go back down to the low. Since then, when they crossed, that literally the last time we got that quote unquote golden cross, it was April 2nd of 2019. COVID, they came down, and we actually did cross, right? So they crossed right there, but just for a few days. That was that like slow reaction because COVID was so fast. This 50-period moving average, like the line isn't going to bend really fast. There we go. End of the day. And then they crossed back over. So officially, the last golden cross was here. And what do you notice? I'll show y'all that. Look at that. Market's been bullish. Keep buying. Keep buying. Relax. But they just crossed. So you tell me. Forget what I think. No matter what I think. What does the math tell you? Because math is a language. It doesn't lie. If y'all can really see that this is just math. All these price things going up and down, it's just math. It's a shorter term average crossing under a longer average. It's LeBron, Durant. It's a player who has a consistently really high average of points per game getting sick. He got sick for a couple weeks. His toe was hurt. You're going to score less points. His shorter term average is going to go down. Compare that to his longer term. And when it crosses, though, so, yeah, I'm paying attention to that. You should be paying attention to that. And let's couple that with what I said earlier. We're in a range. I'll just put it. I mean, I could put it at the bodies. I'll just put it here. We in a range. If we take this candle out, that's not a good thing. I mean, depending on how skilled you are, and we could break the range, but now we're in this range. So just because we come out of here doesn't. There's a higher chance we go back down and test this low. Doesn't mean we'll get there though. And you never know. Tomorrow we might gap up because we got a 200 up there. We might run right back to the 200, which for bulls, if we talking investor, right now you should be hoping and praying we go bullishly out of this range. That's what you want to see. If I'm a bull right now, I want us to get back up to the 200. That's what I want. Break this range. More buyers, less bears. Bears, y'all had your time. Cool. Okay, cool. Y'all, look, we let y'all make some money. It's our turn now. Cool. It's just a baton being passed back and forth. That's all it is. That's all it is. All right. Let me go back to my questions. I had a question. Let's see. Oh. Craig said, do you own property in GI? I'm an investor in Northwest Indiana. When you coming back? No. I used to own my dad's house, but East Chicago, over there off McCook. Not really worth putting a lot of money into, if you feel me. When am I coming back? Man, I ain't been back to Gary in a minute. Craig, I ain't been back in a minute. I ain't gonna lie. I need to come back home. Let's see. Somebody, BK Dot said I got my charts up. Cool. Oh, Shelly May said chart, please, when I didn't have my chart up. Cool. All right, so let's do this. Let me go back up and hit those couple stocks because it's 4. I said I was gonna do a good hour. Thanks for joining me. You rocking with the best. It's the best analysis y'all gonna get, man. I ain't gonna lie. I've watched a lot. This last 6 months, I watched a lot of people who claim to be, and the analysis really is not that deep. It's not that great. I'm sorry, man. You ain't gonna get analysis like this on television. There's some really popular podcasts. You don't get this meticulous candle by candle price. I could talk price action and psychology, all of that stuff. And it all matters. I don't even have any indicators on here. And I literally just told you what you needed to know to be able to make money in this last difficult period. It wasn't that difficult. You just don't have the skills yet. You just don't have the eye yet. And you need a good coach and a good class. And you need time. You need time to spend time, the rigor of it. You trying to learn, get in the trade, you want to make this. People tell me all the time they want to make it a profession, a career. I want to leave my job. How much time you spend on it every week? Because when I first started 12 years ago, I was so obsessed. I saw the future of my life being able to be better and have more free time, which I have now. It took a while to get here, but I have now. I own my time in a way most people would never fathom. I can do whatever I want today. I can go wherever I want to go this weekend. Now, that's because I'm not married. All right, so let's be real. I don't have to But even if I was married, she'd be with me. Or, she might be over here. I'm over here. Come on, man. This was the vision. This was a vision I saw. This is what I wanted for myself. I didn't want to work for corporate America, and I was making 6 figures. No, man, I'm better than 6 figures. I'm worth more than this $112,000 y'all paying me. I'm worth more than that. That really was my attitude. But I put in the time every weekend. There's not a day that has literally gone by in the last 12 years that I have not, even if I don't trade, day trade, I still am going to look at the market. It's just habit. It's normal. It's lifestyle now. But early on, hours, all weekend, tons of books, all that stuff. So you got to put the time in. So let's do this. I'm gonna go back through these charts real quick. I'm gonna hit Tesla. I'm gonna hit AMD. Sophie. I don't know how you say that. It's the hood in me coming out. I'll be knowing how to pronounce stuff. Let me hit y'all with a little Kobe real quick though.
It's in the moment, so you have to live it. And when you practice those things, you become better at it.
You got to study. You got to practice. That's how you become better. Study, the practice. That's how you become better. I'm gonna talk about winning real quick. I love this quote. Tim Grover, he coached Kobe, and then I'm gonna hit the charts. I'm just kind of doing this so I can just switch mode. So I'm gonna hit y'all with this real quick, and then I'm gonna jump on your charts. Tesla, AMD, Sophie, whatever. I call it Sophie. And I think that's it. Those 3.
Winning is not about the trophy and the accolades. It's about the grind. It's about the obstacles. It's about the challenges. It's about the pain that you endure along the way for that 30 seconds of being able to either stand on a platform, be acknowledged by individuals that are close to you. But when that happens, your mind has to immediately shift back because now you felt and tasted something that you could only get through winning. Are you willing to do it again?
That's the realest thing I've ever heard. That's why I keep playing it on all these lives. So I'm on Tesla. Real quick, as you can see, the red line, the 50 moving average, is higher than the 200. What happened? Well, a couple months ago, look at that. Oh, they tried to cross. They actually crossed for just a second, and then they crossed right. It was just ranging, long range, and then market took off. So yeah, please pay attention to the 15 to 200. It should be one of your little studies. You just pop it on. I'm not saying you should look at it all the time. I don't look at it all the time, but you know. And once again, why is the 5200 helpful? Longer term signal for people who just want to kind of maybe add more positions, be a little bit more sentiment, more bullish. So it may be part of your strategy. It may just be information to help you make decisions for your long term and your shorter term stuff, right? So same thing. Here's why I love, and I always start with NASDAQ, because NASDAQ is going to tell you what everything else is doing. Tesla's in NASDAQ. All right. So that range, that same ugly range, it's the same exact, right? Literally, it's the same exact range. All right. Same day. It's like the chart is almost the same chart. All right. That day we broke out, bears broke out, closed under, didn't get a follow through, ranged inside that for just a little bit, still back in the range, which is why I just kind of dragged it all the way across, closed under the range. Right, closed under the breakout, the candle that closed outside of it, and then we proceeded to go lower. How much lower did we go? Tesla, from I'll just say the close of this day to the open down there, it dropped another 18%. It dropped from 856 down to 700. All right, so that's a lot of money on Tesla. That's a lot of money. And this gap, ooh, if you were in that gap when we gapped down, man, you woke up happy. Like real happy. I don't think y'all know how much money people are really making. I really don't think y'all know, because I think if you knew, you get real serious. You just get real serious about what this can do for your life. So Tesla, what's up with Tesla? Same thing. Had a nice push, with no indicators, keeping it real basic. We dabbling back and forth. To me, got a little range. Now we closed today under yesterday's low. And we closed today under yesterday's low and the day before it, but we're still inside this really bullish day. So if you're a bull who bought there, you really don't have a real reason yet to panic. But if we come under this box and you got a doji here, so that day wasn't that strong, and we're right back then, we back down here in this area where most people hope and pray we don't go. That's just weird. NASDAQ is crossing. So is it possible for us to go low? Yeah, anything is possible. I can't tell you the future. It's possible for us to go low, yeah. But once again, if we stay above the 200, so if NASDAQ rises, I would expect Tesla to rise too. Yeah. Pretty similar. Had a little range here, popped up to the trend line. Y'all can see I already had these lines on my chart. Got to this trend line. Let me actually that's the thing I hate about trend lines, right? You kind of always got to redraw them, like readjust them, depending on what happens, right? So, okay, there's my new trend line. All right. Right above that one, touch that one. All right. And look at that, though. This day here, 1228.14, gave you the start of that, right? Truly a downtrend, lower lows, lower highs, right? And we have not broken that little line since. So if you've been bullish on Tesla, then I want you to know you're entering early before the true price action has given you like a strong confirmation, confirming reason that we're really trying to go. And there's nothing wrong with that. If you know you're right, it just depends on who I'm talking to. All right. I could buy down off these bottoms and I know what I'm doing, but I'm also aware of the risk because I'm getting in early before the reversal, right? And then reversal to a real confirmation of getting like the type of bulls we need to get really happens. We ain't went nowhere. We haven't gone anywhere. We ran up to this trend line, came right back down to the 200. Been ranging inside this big ugly day right here. Look at that. It's been ranging in that all day. Well, you know, gap down. This was that day. All right, we gapped down and then everything pushed back up. So AMD's kind of back in its range. But look at where we closed today. All right. So officially, people who got in the last 4 days, all this week, all right, you entered any new positions from Monday, Tuesday, Wednesday, or Thursday. Right now, you're losing. All right. That's how you got to think about price action. So if this happens, you'll do what? If that happens, you'll do what? You tell me. Well, technologies. This one hasn't been around that long. So I want to first real quick just jump to a month chart. All right. So this is its whole, this is everything. All right, this is it. So look at this. Look at this. You see the range here? Look at this. This big huge candle. This month. Look at that month. We've ranged for like a whole. All right. So to me, this is ugly because while the market has been really bullish over this last 20-something months, this has not. This has been struggling. All right. That's why I tell y'all to stay away from stocks like this. If it's not tracking with the general market, okay, maybe if it's like a side account, a little money over here on the side, it's a play you believe in, it's going to work out 10, 20 years from now. Okay, cool. All right, do your thing. But if you're trying to make money right now, this don't even, why would I be in this? It doesn't connect with the broader market. The best stocks in the world are in NASDAQ, the S&P, and the Dow. This does not look like the Dow. All the best companies, the charts really look the same. All right, so but I don't want to beat up on nobody who, because once again, it's new. It's new. It's also new. Right. I use the metaphor all the time. I say, hey, I don't invest in any stock IPO until at least after the first year. Why? Because I wouldn't propose I wouldn't make that type of investment off of a date or two. It's the same principle. When you invest, you start getting real, like, and I'm talking to my investors who right now are like, oh man, I bought it at IPO. It ran up to 28, you doubled your money, you felt like a superstar. And now it's right back down to where you started. Right. Do you know enough about the company to really say it's a solid investment though? All right. Principles. What are the principles you're thinking through? So I'll go to the week. Actually, I'm going to go to the day. I'll just jump to the day. All right, so check that out. Our two moving averages. Ooh, 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 ooh. So the 50 crossed here, back under. That alone is bearish. All right, that alone tells you, ooh, this. Ugh. So, we got this nice little move. The day everything bounced, it bounced as well. Got a little pop back up, ran right to the 50. That was resistance. All right. You should note the last time we touched the 50, we dropped. We made new lows. We touched the 50 here. So put it all together. If NASDAQ breaks that range and comes down, Tesla probably will too. This probably will too. If NASDAQ, an aggregate of 100 of the best companies in the world, heavy tech focus, one of the best ETFs, you can literally averaging 20-something% over the last 10 years. Hard to beat, hard for any investor, any trader, any firm to beats 96, 90+% over the last 10 years of all funds out. If NASDAQ goes up, that gives you information about all of these. If NASDAQ comes out of that range and gets back into that you're ready for a wild ride. And I'm not saying like we can't come out of, once again, anything can happen. We could go down, dip in here for a while, and still end up going back up, like in a very short term. And in 3 weeks from now, we like, oh man, whew, we out of that right, and everybody's happy again. Bulls are happy, everybody back. Right now, a lot of indecision because of these things. Right. So, oh, I should have took that chart, please, off. My bad. Let's see. Somebody said stay south is warmer. I ain't gonna lie, that's why I moved to the south. I can't do that Atlanta. Cold. I'm from that cold. People be like, man, you from up here? I'll be like, man, I'm African. I don't do this cold weather. I'll be like, nah, y'all don't know me. I know I'm African. I know, because cold weather just don't agree with me. It don't. It ruins my everything. So let's see. Christopher John said, I've been stuck obsessing on trading. I have to slow down. I'm extremely new, but looking to free up my time. I'm gonna tell you the honest truth. I'm gonna start saying this to everybody. It's gonna take you 5 to 10 years to become a pro. But that's just like getting a degree. It take you 4 years to get a degree, right? I have no idea. With trading, everybody's like, I want to do it in 6 months, a year. And almost in nothing else in life can you really become like truly sustain full-time, supplement your income. And it's a form of entrepreneurship. And it's tougher than traditional business, because here, if you struggle to make money, you actually lose money. So the business loses money when you lose trades. Whereas if you opened a shop, you could get to work late and whatever. You could just have a hot product, great marketing. It's not like you lose money because up here is kind of off. But when you lose money, it makes it even tougher mentally to get back into the game to actually make the money. But if you don't make them, I'm telling y'all, man, trading's a different beast. It's a different beast. So, Christopher, I would say, man, reach out, do a consult with me. Actually, my schedule ain't even up. I'll take that back. I'll take it down for February. DM me. I got some things I can, products. Clearly I do this to be able to help people, but it does, it takes a lot. It's a mental game. It's a game of capital, and once again, you don't have to become a day trader. Right? So there's different ways to play it, or different ways to make money, right? Is it about totally changing making your full income what you're making now from trading? How much do you need? Would 1,000 a month extra help free up some time, mental space? You need 10,000 a month. Like, what you need? The more you need, the longer that journey, the deeper the knowledge and skill set has to be. Right. And it's time. It takes time. That's all I'm saying. Christopher John says, I tune into you and Joe every time y'all go live. I appreciate that, man. For real. Definitely appreciate that, bro. Charles Holland said, came across Bug, an ETF for those looking for cybersecurity exposure. Charles Holland, you always got something. Always. So let me pop that up real quick. Let me pop that one up real quick. I'll make the chart bigger. Let me just pull it up first. Bug. Bug. Global FDS cybersecurity ETF. Okay. All right. All right. Let me change this around. Let me take my little banner off. Last one I'll do. And I'm just going to look at it on the month chart real quick. So look at the month. Month chart. Why do I always start with the month chart? Because I want to see the longest view. Trend line right there. It was there. We closed under that trend line. Have not gotten a follow through. Right. So, and we're back above that candle, but still inside of this one. Right. So check this out. So I'm just jump here. We're kind of in this range. Okay. Well, let's go to the week. Get a little more detail. Okay. So had a bounce, dropped to new lows, kind of struggled to get through, tested this bottom. That's good. That's a good sign. That's a good sign. All right, that this already tested this bottom, but everything just tested a bottom. Actually, everything went lower. It's good that this didn't actually go lower. It tested the bottom when the whole market went lower. Compare stuff to the market, right? That's a good sign. And if I go to the day charts for us, actually, let me go to a different one. I want to go to that one. Yeah. So what happened here? My 50 crossed under, but we're getting some bullish activity. So we're above the 200 and the 50. Oh, my bad. I said that the wrong way. No, wait a minute. Hold on. Let me find something. Wait, hold on. I want to go back. Oh, there we go. There we go. Okay. So we started getting 200 here. Yep. Okay. So everything was bullish. You want the red over the blue. You want your shorter term averages. Here's the thing. Every time the market is in an uptrend, like a strong uptrend, your shorter term averages are always above the longer term averages. It literally is just basic math. I want you to put on your chart a 10 period moving average, a 20, a 30, a 40, a 50, a 100, and a 200. When trends are really strong, they perfectly align in order, perfectly based on their number. You'll get the 10, then the 20, the 30, the 40, and 50. When they start crossing, when stuff totally goes terrible, they will literally be in the opposite. Your 200 will be highest, and your shortest term average will be at the bottom. All right. A little concept called a perfect storm. When everything flips, 200 is at top, then you got the 100, then you got the 50, then you got the 20. Ew. Don't buy that dip. All right. So we just crossed the 200, crossed under. Not a good sign. Bounced off support. Good sign. Back above. So once again, if NASDAQ goes up and we get some good volatility, get pushed back up, get more bulls, get more buying, and can stay up, then this cross would probably cross right back over. But we still not out there, right? We still not out. We're not. So I'm not saying this is just like, oh, this is amazing. Just, but I just the first time I looked at it too. So, do your analysis, spend more time with all this stuff.
Winning is.
Oh, that's not what I wanted to show. All this week, man, it's been a crazy week. A good week. I've learned so much this week. It's been such a good week. So I'm gonna hit y'all with some Mike Tyson before I go, because this really should, right? This should be your mindset. This should be your mindset, your approach, if you're trading right now.
There's no one that can match me. My style is impetuous. My defense is impregnable.
Yo, my style is, I think he said impetuous. I don't even know if that's a word. I love Mike Tyson. I do. He said my defense is impregnable. That's an actual word. His defense. And you always think about Tyson, you think about his offense. He also had defense. Right now, you got to be defensive. It ain't time to, well, I'll take that back. You want to be both. I'll say that. I don't want to give you a bias and make you feel like the market can't go up. Because as we just said, next week we might be at new highs. Well, not new highs. Let me take that back. We may be pushing higher. Had a really good week. Got out of that range. More buyers. All right. I don't know. We'll see. So that's about it for me. Thanks for joining. Thanks for checking me out. You can see these videos, all of these live videos. If you want to go back, learn even more, go to I'll change the name. Go to Being Noble. Just Being Noble on YouTube. If you want to check out my classes, courses, all that great stuff, products. I'm doing right now 2 classes. I'm teaching a 7-week options class, and I'm teaching a 7-week live futures class. For a reason. Most people can't teach futures and options. Wouldn't even dare try. Don't have the skills, don't have the experience, don't understand the technicals. What I really, really, really know is this. If you give me a chart, it does not matter what it is. I can help you make some money. but it takes time, serious time and commitment to learn the craft. So that's about it. Thanks for watching. And as I always say, share this video with somebody that you know and that you love. Needs to think more about investing, needs to get more serious. Some of y'all need accountability, but you need your friends. You need your friends to get more serious. Right? Why? Because y'all know how it is. If you make a lot of money and I'm not, y'all know how that goes, right? You want to have a little healthy competition with your friends. That's good. That's good. Yeah, my friends are traders. My friends are oh, B dot. Oh, okay. I think I know who that is. But I thought, anyway, whatever. Anyway, thanks for watching. Talk to y'all soon, man. Follow, comment, all that great stuff. Share this with somebody that you know that you love. Have an amazing day. Be blessed. Peace.